Let's get across the total markets and the profit results today with Ed Boyd. Ed, lots of profit results now. Let's start with the Super Retail Group, one of the best performers on the market.
It had a great day on the market today, Ross. It reported record sales in the financial year, just under $4 billion. Like-for-like sales at Supercheap Auto rose 2%, while sales slipped 2% at Rebel Sport and were down 1% at Boating, Camping, Fishing. They were flat at Macpac. The gross margin, though, climbed 10 basis points to 46.3%. The net profit and normalised profit both fell during the year. The retailer cut its final dividend but doubled its special dividend to shareholders. It also reported 3% like-for-like sales growth over the first 7 weeks of this new financial year across its 4 major brands. So the shares today were up a bit over 6%. And separately, Super Retail Group today lost its bid to suppress documents outlining the payout terms of 2 former senior staff members who have turned whistleblowers against the company. Now, they allege serious corporate governance issues with the board at Super Retail.
Indeed, Ed, there was an affair alleged there on the way through. OK, what about Whitehaven Coal? Just announced the partial sell-down of one of its Queensland mines.
Yeah, this is an interesting one. It only just finalised the buyout of BHP's Blackwater mine in Queensland earlier this year, and already it's sold off a 30% stake to 2 Japanese coal customers for about 1.6 billion Aussie dollars. Now, those customers, they've bought a stake in the mine to really shore up supply for their steel mills back in Japan. Whitehaven's revenue slipped almost 40% to about $3.8 billion during the financial year. That's due to falling coal prices. Net profit slipped, and on an underlying basis, when stripping out those acquisition costs, the profit was about $740 million. Whitehaven says demand for coal from Indian buyers is slowly increasing, and that demand's expected to push up metallurgical coal prices in both the near and long term. And here's the share price reaction. You can see Whitehaven also one of the best on the market today, up a bit over 6%.
Yeah, pretty good. The other one, let's go to the gold sector. Northern Star Resources, the biggest Aussie gold company in Australia. How did that go?
Did pretty well. Look, biggest Aussie gold miner. The biggest miner on the market is actually the American Newmont, which bought Newcrest last year for about $26 billion. But Northern Star, it's worth about $18 billion. Then Evolution's in third place at $9 billion. Now, Northern Star reported record earnings, revenue of almost $5 billion, and a strong increase in both net profit and underlying profit during the year. Northern Star said gold prices lifted 15% during the financial year to about 3,031 Aussie dollars per ounce, and it cost them about $1,850 an ounce to produce that gold. So it made a pretty nice profit, lifted the final dividend. You can see the share market reaction here, up just under 2%, Ross.
OK, and the final one we should cover, Medibank Private. It's obviously one of Australia's biggest health insurers.
Yeah, look, it had a bit of a tougher year. They say competition in the private health insurance market is really heating up. The company said it missed its growth targets for Australian resident policyholders. They only creaked ahead by 0.7% during the year. But Medibank say this disappointing result was improved by the growth it received for its non-resident policyholder sector. That lifted 25%. That's thanks to foreign students at Aussie universities signing up for health insurance. The company's net profit and underlying profit lifted during the year. It did raise its final dividend. The full year payout is 16.6 cents a share. Here's the market reaction. It started in positive territory during the day and then ended up down 2.3%. Now, turning to the overall stock market, it opened high this morning, lifted by tech stocks and mining companies. Utilities and banks dropped. ASX 200 finished the day up 0.21%. Now, one of the top stocks today was the online bookie PointsBet, which reported a net loss of about $40 million in the financial year, but that was down from a loss of about $108 million the year before. Communications and metal detector maker Codan also reported, posting a 24% increase in full-year profit. Machine learning tech stock Appen shot up today as well. Its half-year results are on Friday next week. Logistics software maker WiseTech, well, it kept rising after its strong results yesterday, set a new record high for its share price today. It's now at 120 Aussie dollars. And property developer Stockland, it beat its revised property sales guidance in the financial year. That surprised the market, so it jumped as well. Cloud connectivity provider Megaport posted its first ever net profit during the financial year, but the market hated its guidance numbers, so it got crunched down almost 21%. Wealth manager Insignia Financial got hammered as well. It posted a loss of about $185 million and paused its dividend payouts. The market didn't like that. Education provider G8 got crunched after posting lower than expected revenue and flagging tougher trading conditions ahead. Domino's Pizza dropped after its results yesterday, and Bank of Queensland slumped after its restructure. Ross, that is markets.
Thanks so much, Ed.